Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there, welcome to the program. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, Hittner Group. That's all one word, kids. HittnerGroup.com, 612-627-8000. That's 612-627-8000. Give us a ring-a-ling-a-ling. We'd be happy to have a chat with you about your real estate needs. And, of course, that first call is all with no cost and absolutely no obligation. Well, we got the spring season kind of kicking off here. Got some beautiful weather finally out in the marketplace. All the snow is off the roofs. For some people that's good news, and for other people it's not so good news. You know, when you sell the house and you have an inspection.
I go, no, I need a new roof.
Yeah, all of a sudden you need a new roof up there. The Twin City market seems to be outperforming the national market considerably. You know, national market, they just had, we had the Wall Street Journal report that we reported last week. That said December was a delisting month. You know, all these properties coming off the market. Well, as it turns out, January was 4.5% worse nationally. But
you mean with listings coming off the market
and volume? It just everything is down. It's 4.5% off. Year-to-date numbers, it's like 2% up from compared to January of 24.
Nationally or locally? Or
nationally, I'm talking about.
Okay, sorry.
But the whole premise, Kelvin, was that the Twin City market is outperforming the national market. And so we're up like 8% in the Twin City area.
I can't believe how busy it is already.
So we're busy. It's good. And our company is up like 9.5%. So we're outperforming the market here locally. And there's people out there out showing houses this week. And you know, for the first time, you know, you're kind of bumping into other agents who are coming in with their people, you know, and you're going out there coming in. It's just good to see the activity. Good weather helps too.
Yep.
You know, because it's when it's 15 below zero, some people just decide to kind of hold for a week.
Just wait.
Are you guys running a lot of open houses with your properties currently?
Well, actually, I have a couple open houses this weekend. Now that you mention it, 1 to 4 p.m. on Saturday and 1 to 4 p.m. on Sunday in Shakopee on Molina Street.
Same house or different homes?
Yep, same house, open Saturday and Sunday. We do have some showings set up. Handful of showings Thursday, Friday, and then open house Saturday, Sunday. Hopefully we can get it wrapped up. I mean, that's the case with some nice, clean, move-in ready properties. If they're coming on the market, they're in that reasonable price point. This one's at $409. 3-bed, 2-bath, 2-car garage in Shakopee, and yeah, you expect to get an offer if it's priced appropriately that first weekend if you're having, 10 folks through or so.
Nice homes sell.
Yeah, nice homes, nice clean homes priced appropriately sell.
Yep.
You know, and the ones, if they got hair on them, they take a little longer.
Yep.
And I love doing open houses.
Do you?
I do.
Why?
Speaking of which, I got a call yesterday on Taylor Street or whatever.
Yeah.
What's that one?
Yeah, Taylor Street, yep.
You know the address?
Yeah, sold.
It is sold?
Mm-hmm.
Good. So I got a call from somebody who said that there was an open house yesterday from...
but I canceled it.
Yeah,
yes,
well...
They must have not saw that part.
Their agent told them there was an open house, so they showed up.
And so listen to me now. This is exactly the thing that I've been finding with open houses, because I do a lot of open houses.
So then I hopped just to finish up.
Okay.
I hopped on MLS, and then I went to Zillow and Realtor.com and the public sites that they would be seeing.
Yeah.
And said, well, there's nothing scheduled here. I don't know what to tell you.
Yeah.
Call your agent.
Yep.
So
I go through.
So you did have an open house scheduled.
I had one scheduled, but then it sold, so I canceled it.
Yeah.
So we have. I get in these open houses, and the people come through, and I like talking to people. You know, I just like talking to people at the open houses, and I'm kidding with them and stuff like that. And I always ask them, who their agent is and all that, because I know most, anyone that's doing anything. And it's amazing. They all have agents. And it's like, well, where's your agent? What are you doing here then? Where's your agent? The car's still coming in here yet, or what? There's just like so interesting how since for the last couple of years how the market has changed on how people look at houses, and there's one couple. Well, we were out, looking at houses yesterday. So they're out looking at houses yesterday, but they're shopping price point. So they're looking in an area that the agent wasn't showing them, right? Because apparently, for one reason or another. So then they see a house over here that looks kind of decent in an area that they didn't tell their agent that they would be interested in, but the price point is there, so then they go running over to look in the open house. But that's the whole point of the open house,
Right.
is to make the property available and make the public aware that the property is there. And whether or not they have an agent is neither here nor there. You want to make the buyer aware of the property. And I like it because of years of doing new construction. It gives me a chance to kind of slow the whole pace down, have a conversation with people, demonstrate the property, show them some of the features and benefits of that particular property, and answer questions and have a dialogue. Or if they come in with their agent on their arms many times, the agent is kind of sheltering them, pushing them off, and doesn't really want you
During the open house.
During the open house,
Yeah.
and doesn't want you to say anything, and all that kind of talk.
Can
So-
people set up a showing while you have an open house?
Sure.
That's fine, right?
Absolutely.
Okay.
Yeah, no problem with that at all. In fact, I had one like that last Sunday.
And then the other question I'd have is, why went, like you talked about this one, you canceled the open house. Why cancel it? Because you could maybe still pick up a buyer. They're going to look at this property. They may make an offer yet. You may pick up a buyer because they want your style of representation on their new home.
Yeah, well,
No? Yes.
that's true, but I had
Okay.
other things that I needed to be in. We have a couple other properties coming on the market, so I had other work that I already needed to get done, and so it's just a better use of my time. Rather than go up and stand in a house that's already sold, someone comes in and then you have to tell them that it's sold. It's like, well, what?
Is it so? Is it through inspection already?
The inspection is going on as we speak. Yeah.
Okay.
Well, actually,
so then
by the time you
it
hear
wouldn't
this,
have been sold, technically, right?
Right.
Because-
next time I have that, Calvin, I'll call you and you can
Let
come
me
with.
know, and I'm
you
gonna
can
come
come
up
with
there.
me. I can't even get a brochure out of you, so.
Brochures are generated automatically.
Yeah.
System.
Yeah.
Right.
Anyhow,
Sure.
5,200 homes on the market right now, up down 2% from last week. Down 2%. That's the Seven County metropolitan area, Keith.
52 what?
5,210. 5,200 homes on the market, Seven County metropolitan area, active listings, down 10 houses from last week. So our inventory is not building, but the reason for that is because we've got houses selling. So we're in that terrible situation there where you've got houses coming on the market or being sold faster than they're coming on the market.
Yeah, I think there's a little bit of a window of opportunity. I'm talking with a couple sellers about that specifically right now.
Yeah.
Our inventory is a little bit. It's lower. It's that time of year.
Yeah.
And it's just at the beginning of the season. So a lot of times when we're doing listing preparation and talking with sellers about their house and timing of the market, etc., certainly the inventory will grow now until it starts to level off and then taper off towards the end of the year. But you're looking for, they always say, when's the best time to list the house? Generally, spring, whenever that is. And you watch the trajectory of the market, how fast things are selling when we're out showing properties, the amount of people we're seeing, and the lack of inventory, good inventory that's available. And you say, we have a little bit of a gap here before that inventory starts to come on. You're seeing a lot more coming soon. You're seeing a lot more houses that are hitting the market. And so right now is a really good time if you're prepared and you're ready to go, then to get your house on the market. Right now is a really good time.
But we only have, we have 5,210. In pre-COVID, 2019, it was 5,800. So it's a little bit less than then, but it's pretty much normal. That's normal. 2020, it was 5,391, so it's about the same. So I think that the inventory shortage conversation is kind of passing us now, and we're kind of having a normal. I just see this as just a really historically normal market.
Yep. I think there's a lot of demand right now, seeing a lot of pre-approvals, and folks are out there shopping for homes.
I do too.
And so you're a little bit ahead of when that inventory starts to increase every year.
Mm-hmm.
And so it's a great time to really get your house on the market right now if you're prepared to do so.
Do you think I'm seeing multiple offers all over?
Yeah.
It's
Yeah,
crazy.
yeah,
You
price
think that
points
will
for
come
sure.
back down when more homes come on the market in the
No.
spring or not? Or you think we're going to be in this multiple offer stuff again?
I think that depending on the price point, if you have a clean house, well prepared for sale in a nice area, you're going to have multiple offers because there is the demand for it. I think that the interest rates, especially now, you report on it in the fourth segment, but the interest rates are kind of normalized. Where historically normal that they're going to be. We're not going to have any shockingly
Right.
low interest rates, coming anytime soon. And people have been, I think, maybe mistakenly, but waiting for rates to come down. And so now we're a couple of years ago we were selling ahead.
Yep.
Now we're lagging. I think now we've got people who are catching up who wanted to move last year, then didn't because rates were high. Have now come to grips with the fact that rates are where they are, and we got to move. Hey, welcome back. Thanks for sticking around. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, HITTNER Group.com, 612-627-8000. All right, so I got a couple of questions. We got James in the studio. Before I get rambling on here, why don't you give them your contact information when you're talking about insurance?
Good morning. Thanks for having me. The Preserve Group, I'm at 651-728-4334 or mypreservegroup.com.
Okay, so we're talking about a brokerage now. So you got multiple lines, different companies that you can reach out to. So on the networks and the television programs that I tend to watch, they always have these life insurance ads where you can sell your life insurance policy to people, and so essentially, I'm guessing what they do is they just your policy stays in place. They pay the premiums on it, and you name them as the thing. You kick the bucket, and they get the money, and then they pay you 10 cents on a dollar up front or something like that.
Sounds about right. Yes.
It's more than 10 cents on the dollar, though.
Well, it depends. It depends.
I have no idea. What is it?
It's about 30 to 40 cents on the
Okay.
dollar.
All right. So you get a couple of bucks up front. So if you got $1 million policy, you get $300,000.
And they have their actuarial tables that they just figure out when they're going to die, what their investment is, what they can pay out.
Yeah.
Just kind of like a reverse mortgage.
Sure. Yeah. Not a bad deal.
No. I'm trying to get it right now.
I'll just get rid of my term policy.
Yeah.
Not real likely to happen on a term policy. It's going to be permanent insurance.
Yeah, and they do say
really?
a lot of those advertisements
They say
even term policies.
Even term policies.
Depending on how old you are and how long the term policy is and all that stuff.
Yeah.
There's no guarantee we're going to die in a short term. We are going to die.
Yeah. No one gets out of here alive. So I got thinking about it, and I thought, okay, so what about house insurance? What if I wanted to buy a policy on my house across the street?
Great question.
Can I buy a policy on the house across the street and name myself as?
You have to have an insurable interest, don't you?
I don't know.
Yeah, of course.
You like to steal my thunder.
Sorry,
that is
buddy.
the term in the industry. It's called insurable interest. So
Thanks
you
for
have to
coming,
have an
James.
insurable.
See you later.
Yep, absolutely. So you have to have an insurable interest. So if there was some legal agreement in place where they owed you money or there was a lien on there, they could put you on there. But typically that's not likely going to happen.
Okay.
They're not going to allow you to have a policy on something that you don't own. In the same way, I've had this happen previously. We're talking about homes, but on a car, you can't insure a car that you don't own.
Okay.
So those type of situations come up more often than you'd like.
So, but with life insurance is different.
Well, you do have an insurable interest because you bought it.
Okay.
So they're essentially paying it out. It's
They
called
bought the
a viatical
policy.
settlement.
Okay.
And so it really isn't a good situation. But for
Okay.
some people that are in dire straits, then they need the money. They'll make those. I don't hear about it very often, but it does happen. You're absolutely right.
They must do it. They must be pretty profitable because they're sure running a lot of ads on TV about it.
Well, of course.
You know.
Like you said, 10 cents, 30 cents on the dollar.
Yeah, and they have to make the payments for a minute.
Yep.
All right, so then that's that. Then the other thing I got a question about is when you have a good loan officer that actually has like brochures made up for you for your property, or specific to your property and
Absolutely.
whatnot. Maybe has a little statement on there about why you should work with that particular loan officer. As opposed to some computer-generated, mush thing that comes out from corporate. When you have that, same thing with insurance. Then could I then, if I've got a property listed, and say that I'm concerned about the property, maybe it's a, whatever the concern
It's got a
is.
cedar shake roof.
Yeah, could I get quotes on insurance then for that property? So when someone comes into my open house and they voice that concern, I can say, well, yeah, as a matter of fact, here, I've got quotes here from this insurance company. It's absolutely insurable, and here's what it's going to cost you.
Sure, I like that approach. That's good. Where I struggle is that every insurance policy is specific to you and your insurance score.
Oh.
So we can do a general quote, but if customer A has 2 previous claims in the last 5 years, they're not going to get a policy. Number 2, they're going to pay a higher premium. And I mentioned the insurance score, similar to a credit score, but it's not a credit score. They're not pulling FICO, but it does play into the role of the premium that you would get.
What goes into that score?
It's more like they call it a soft credit. So they're looking at similar stuff. It's just they're not pulling. It's not going to affect
claims history.
Claims history is totally separate. Claims history is the number one thing right now. I've got carriers that won't touch you if you've had one claim within 5 years, even if it's wind hail.
Okay.
And then I've got other one that won't write you if you've had one non-wind hail claim. I mean, it's just it's tough.
It's challenging right now.
Exactly.
So then what I'm hearing is yes, you can do it. We can have a general thing, but like a mortgage thing, where I got the sheet there says here's what the payments will be on here. That's assuming a normal credit score. And so right, Kelvin?
Yep.
Right.
So when you have
You could disclaim probably and say with 0 claim history, with a credit score range of XYZ, this would be in your insurance on the property.
And I've thought about doing it. I've been asked to do it, and my issue is, core value, number 1, honesty, number 2, integrity. I don't want to put numbers out that are somewhat misleading. I don't want your customer to come in and say, how many times?
I got this thing here on this property, and you said.
And to beat up on the mortgage guy when they send their good faith estimate, and they're putting, $150 a month for insurance, and it's probably going to be more like $400 a month. That just setting me up for failure. That happens occasionally, not all the time, but once in a while.
What factor should we be using on that? Because I just increased ours on our worksheet.
Right.
To, I think we're at $6 per thousand of value right now.
Yeah.
And we were at 4.75 for a while, 4.5. Now we're at $6 per thousand.
Sure.
Is that close?
It's so challenging. You give me a $1 million brand new construction house or a $500,000 house built in the 60s, you're going to pay less for insurance on the $1 million house more than likely than you are on the $500,000 house. Because of the age.
Oh.
I mean, they're looking for. I'm told 20 years old or older is an old house now, and obviously the roof 5 years, 10 years that's old, and so that's the challenge. There's really no way of knowing, and
but
you have to put something in there.
So what would you put as an estimate? Other than
I would call me, and then I'll take 10 minutes, and then I'll give you the exact number, so we both look good. But I'm being serious.
Yeah.
There's really no. You obviously want to.
So you want
low.
the address so that you can do your thing.
Exactly.
And make it more property specific than
Right.
just some.
Exactly. And I get calls. Hey, can you tell me what's the ballpark on a new car on this car? Unfortunately, there's just. I mean, if you want the truth, give me the VIN. If you want me to guess, I could be within $500 because there's just so many factors, and I want it to be easy, but it's just not. Simply not.
So I'm curious about the thought process behind the age. So if I have a house that's 60 years old with a new roof on it, what difference does it make if it's 60 years old?
They're looking at everything and the likelihood of things breaking down. The roof is huge. The roof will have a bigger, that'll have a huge impact.
Older electrical components and wiring.
Correct. Yep. Everything. They want new, which is interesting because you can tell me.
But it's not a repair thing, though. I mean,
there's a higher hazard, though, with older electrical wiring and outlets and fixtures and all those things from a fire hazard standpoint.
Right. You tell me, is a house 60 years ago built with higher quality than today? Potentially? Probably.
Yes.
Yeah. So. But what you said, that's exactly right.
Yeah.
What about, speaking of electrical, then what about like circuit breakers versus fuses? Do you see any kind of a delta there between what your premium would be from one versus another?
Yeah, it's funny you mentioned that. They all ask about knob and tube, and then nobody will write that.
Okay.
They want circuit breakers. So it's
knob and tube. What's that mean?
That's old school.
That's old school. It's rare. I see it.
Okay.
I've seen it in older Minneapolis homes. 1900.
Yeah.
St. Paul.
That's not the fuses.
No, that's just raw wire running.
Physical
God.
wiring in the home.
Yeah.
It's like these little kind of ceramic deals, and then the wires just kind of run and wrap around them.
Yeah.
I know what that is.
You won't see
Okay.
it, but
Yeah. Well, you'll see it a
It's
lot.
1 in '1,000.
St. Paul, some of the old houses, you
Yeah.
see it actually more than you think.
right.
So many times a house, built in the teens.
Yeah, because to upgrade that or change that over, I mean, you're talking tearing walls out everywhere.
Yeah, it's a big deal.
It's
So
a big deal.
Carriers won't write that, but circuit they'll still write, or fuse box. They don't like it. It's going to cost more money than a circuit breaker. They'd like to see it updated.
Do you go into places now? We got a minute left of the segment, a minute and a half. Do you see people now just not insuring that they'd cancel the house is paid for, so they don't have a mortgage company, requiring insurance? They're just saying, "Look, I'm going to self-insure."
Sure. I've had people say that, but
Uh-huh.
rarely do they do it when they're frustrated about the premium.
Well, we just had a
But-
conversation about a gentleman who had zero insurance.
Yes, yes. Probably don't have enough time to tell the whole story, but a client of mine out in Maple Grove, they own their home outright, and long story longer, they wanted to insure a condo to rent out for the Super Bowl. And I said, well, I need to insure your primary residence. Who is that with? And I found out, whenever the Super Bowl was here, 2018, they didn't have insurance on their $500,000 home
Because it was paid for.
because it was paid for.
Yeah, and
So
you
are
see
you
that you
required-
see that a lot in Florida. I was talking to someone
As long as there's
yesterday.
no mortgage, you don't have to have insurance.
Yeah.
You don't.
Right.
No.
Okay, I
Yep.
didn't really. Yeah, I
Crazy.
guess who would
It's
follow
not like
up
a
on that?
car, like you're driving around, like the state requires you to have insurance because you're driving around, your liability, et cetera. But
Right.
if you have your house and it burns down, too bad for you.
Yeah, too bad for you. Better hope you have some money saved.
Yeah. Well, on that note, James, give us your contact information before we go out.
Sure. 651-728-4334. Again, 651-728-4334.
For all your property and casualty insurance needs, give us a call at 612-627-8000. That number again is 612-627-8000. And log on to our website, hittnergroup.com. And we'll be right back.
Hey, welcome back to the program. This is your Real Estate Chalk Talk with the Hittner Group, hittnergroup.com, 612-627-8000. Thanks for sticking around on this beautiful afternoon. Okay, James, I got a question for you. I have an old pickup truck that I let people use, right? So some Kelvin's used it.
Yep.
People use it. They want to move some stuff here. Yeah, go ahead and take it.
Keys are in it.
Yeah, keys are in it. Just fill it up with gas and
Yep.
bring it back full of gas. That's all I ask. What kind of exposure do I have on that if they're driving down the road with a sofa in the back and they have a problem?
Yeah, that concerns me a lot.
Okay.
A lot. Well, the first thing I'm going to ask you is this car registered in your name or the business name?
My name.
Okay, so then I'm concerned. So anything that happens in that vehicle, regardless if you're driving or if you give somebody permission, also known as a permissive user, it comes back to you. So if you loan that truck out and they cause a big accident and people are injured, the first line of defense is going to be your insurance policy. They're going to look at your limits, your net worth, your umbrella policy. Now, a good attorney is going to come after the driver potentially as well, but they're going to exhaust you're the primary because you own that vehicle. So it does concern me, how well you know the people that you're allowing to use your truck, but situations do happen, unfortunate situations.
All right. So then you asked me whose name it was in, and so there's many people have leased trucks that they have with their team on the side and all that, and they let their
Like a Hittner
clients, like a
truck.
Hittner Group truck, and they let their people use it and all that. How does something like that work then?
Well, just another layer of protection for you personally. Because
But is there like some kind of insurance that you'd have there, or do they have to sign a lease, like a rental or agreement? Would that protect somehow, or what?
Sure. So I wasn't looking at it like that. I was thinking if the Hittner Group owns the truck and the Hittner Group loans it out, they're the entity. They're not going to come after you personally. But now we're talking something totally different. If you're renting it out or making them sign a lease agreement, now you've got a separate business. Now you're using it for commercial purposes, not just here, let me loan it to a friend.
All right.
So that's a whole nother can of worms.
Okay.
And probably a larger premium than you want to deal with. So
Really?
Wonder how that works though, because you see that a lot.
Right.
With a lot of different businesses.
you just gave me an idea. So you're obviously everyone knows Airbnb, Turo. Familiar with Turo?
Yep. Very.
So, I suppose you could do something like that. And they have their own insurance. Hopefully I don't get in trouble for saying them on. But you can have a truck and you can rent it in that way and protect yourself.
Like if you had a vehicle at your Airbnb. And people
No, Turo is just like Airbnb
like
for
a-
vehicles.
Yeah.
So if I wanted
It's like
to,
a rental car company.
Oh, really?
It's like National Rent-A-Car, except I'm going on there and I'm finding your truck and I'm going, oh, $15 a day?
Sure,
Oh,
kind of a ride share deal. If I got an extra car, I can just throw it out there for people
you
to
can
use
put
it.
on there and they can just come.
Because they want something specific. They want a white truck or a black SUV. They want that, and that looks really sharp. So I'm going to pick that. Whereas you go to the rental car company, you get what you get, right? And so it's a win-win for both parties. But I believe they carry their own liability insurance. You have to insure it personally, and then they have something on top of that. So
Not different than our Swimply. So we have Swimply and Swimply Spaces that we use in it for our house, and then
Sure.
and then all the money goes through. No one pays us directly. All the rentals go through Swimply, and part of that agreement is they provide the insurance, the liability insurance.
And that's for people to use your pool, your swimming
pool
pool,
or
your
the
space.
or the space, even
Okay.
if they're just renting
Sure.
the space for a meeting or something like that.
So it doesn't come back to you if someone gets hurt in your pool room.
Correct.
That's a big deal.
That's
It's a big
huge.
deal.
Yeah.
Yeah. So there's another company that we use that's just a venue space, and they don't provide that service.
Okay.
You know, but they don't. They also can't use the pool. Doing that. That's simply a space. We have photo shoots and things like that come
Okay.
there, in there. But they said it's your homeowner's insurance. That's it. You know, there's no liability coverage on there, and that's why you have to have the big umbrella.
Right. And I hate to see any of these things happen. And what I wanted to share is I had a situation where somebody loaned a car to somebody they knew. They had never borrowed their car before.
Okay.
And they had an unfortunate accident, and they hit a pole, and the passenger was very, very injured.
Okay.
And so that's an unfortunate situation, but it happens, and we want to make sure that we're protected. So loaning your car out to people that you don't know very well,
Not a good idea.
not a great idea. Make sure.
So a passenger of I'm gonna have to have a conversation with my wife about this. So a passenger that was one of the parties that borrowed the vehicle got injured.
a friend of the person who was driving.
Yeah,
Correct. Yeah.
Okay. So then
So,
that comes back to the homeowner then on that.
Right. Or the whoever owns the car
Okay.
or the home. Yeah. In that
Gosh, that's
in this
great.
situation.
But you
Okay.
have insurance policies in place to take care of that stuff, right? You have liability limits, you have umbrella policies. So if something were to happen, I don't know, do you expect you to know the answer totally, but are they going beyond that? Are they like, here's your insurance, this is what we want, now we're going to go after something else because you have a bunch of money?
They certainly can. A good attorney.
Mm-hmm. That's why I got to have a $2 million umbrella.
Yes.
What's
Yeah.
mine?
Uh-huh.
You're good.
Yeah, very
Good.
good. All right, so then
That's enough. You're good.
That's enough. I guess I keep letting them use it. What the heck?
Keys are under the mat.
Yeah, keys are under the mat. Bring it back full of gas.
Don't die.
And don't die.
Don't
Just
kill
want to
you.
talk about a couple of properties that we've got coming on the market. I can't give the addresses, but I can describe the properties because right now they're listed and withheld, and I just want to share what opportunities are out there. 3 of them in Eagan.
That's great.
Yeah, so we have a beautiful brick Rambler townhome. Now, I had the
Townhome.
I'm
Brick.
sorry, single-family home.
Okay.
Rambler. So I'm out to dinner with some friends, and he's in the construction business. He just retired. He's done $300-400 million projects, big projects, and also real high-end stuff out on the lakes. And I asked him, I said, what is the difference between a $2 million house and a $3 million house? I mean, you tell me what the difference is.
Finishes.
Actually, two homes the same size.
Okay.
You go into them. One's $2 million, one's $3 million. You go in there. They both got the fancy schmancy kitchen. They all have fancy wood species. They've got their architectural features. It's just like, what makes one worth $1 million more? And so it was an interesting conversation because we started talking about things you don't see that add cost to building a home like that. And one of them is he built a house out on Lake Minnetonka, and huge patio area, right? And so they wanted an architectural patio. Well, what's an architectural patio? Footings. They didn't want that patio to move. So
Wow. Okay.
all around the perimeter of that patio is frost footings all the way down, and then a couple of them running in the center of that patio. That patio is not moving. Well, just think about that. That's all underground work. And the backfill and the compacting and stuff. That was the most expensive patio that you've ever seen in your life.
And landscaping in general is expensive.
And
on
the
top of
landscaping around it.
creating it to be solid.
Right.
withstand Minnesota winter.
Minnesota winter. So now you've added all of that cost, to that property, and things that we used to do when I used to build a lot of houses and rep a number of builders. Like in the kitchen walls, we would put stranded lumber in the kitchen walls. Stranded. So it's just like think of a joist, floor joist that's it's got glue. It's basically wood and glue. But it's stable. It doesn't move. It doesn't shrink. It doesn't twist. It doesn't turn. It doesn't do anything. But it's really expensive. So you put that in the walls in the kitchen, especially on the exterior walls, so when you hang your cabinets, you don't have that movement on hanging the kitchen cabinets. Well, that was an upgrade, of course, to do that on that house. Well, these homes have that throughout the house. All the walls are like that. So they don't have any movement in any of the walls. And the cost, can add, double the price of the lumber in a home like that. So those kinds of things are the things that add cost and value to a property that on the exterior, on the surface, you wouldn't know about that and you wouldn't see it. And some people appreciate it and are willing to pay the price for it, and other people don't, and they're just not gonna fork the money out for it. But it's all of those things come through. Your wiring in your house, is it Romex running through the house like every other house is, or is there conduit, and the Romex is inside the conduit?
How much of that stuff is really necessary, though, Keith, and how much is just I don't know what to do with my money, so I'm just going to spend it?
It all depends on what's important to you. So if you have if you have conduit in the house,
do the lights turn on any differently, Keith, when I go like that on the switch?
No, but it eliminates the EMFs that come into the house. So if you're concerned about having a healthy home that doesn't radiating you, which is demonstrating that's true, because there's companies that make their living on suing the power companies because those EMFs affect milk production and all of that for the farmers on the big power lines that run over.
Really?
Yeah. Sold a house for an attorney. That's how he made his living, is suing the power companies. And they have studies. I mean, talk to Bobby Kennedy, man. Okay, we got to head out the break now. This is your real estate talk with the Hittner Group. HittnerGroup.com, your healthy home headquarters. HittnerGroup.com. 612-627-8000. That's 612-627-8000. Give us a ring-a-ling-a-ling. We'd be happy to help you. Look forward to it. Look forward to having the conversation and get you moving on into a home that better fits your current lifestyle. We'll be right back. Hey, welcome back. Thanks for sticking around for the big money segment of the program. Boy, you've got breaking news here. Calvin Kamick, ladies and gentlemen. 651-231-2500. 651-231-2500. That's where you get the great rates and low cost to acquire.
The breaking news is rates are down a little bit.
There you go.
That's it.
What's a little bit?
Nothing, hardly.
What's hardly?
6.875 30-year fixed money. 6.75 maybe.
That's at par, or
yeah. So that's probably paying a little bit to get there.
Mm-hmm.
So I mean everybody needs the news segment. Something new for news. So headlines this week where bonds can seemingly do no wrong, mortgage rates trickle to another multi-month low. So rates are coming down a little bit. So there's going to be a 6 in front of your rate right now, not a 7. That's great news.
Yeah.
I was with somebody. I had a 6 o'clock meeting last night, and we're doing a 1-0 buy down, which we're going to, again, just offer on the show. If you call in from the show and mention you heard us on the radio show, you get a 1-0 buy down for free, which means you just start 1% under the market. So in this case,
you got a 5 in front of you.
Yep. So you start with a 5 for
That's
the first
fantastic.
year. Next year you're going to be. So let's say we're at 675. You start at 575.
Mm-hmm.
So in this case, he wanted his payment. It's so great, right? They want, I don't know how much land I want, but I do know I want my payment to be under $1,500 a month,
Mm-hmm.
and I qualify for about $250.
Yeah.
I'm like, I don't know where you're gonna move,
Right.
So now that you're looking at outskirts, you're looking, Elko New Market,
Yeah, way out.
Yeah, way out, right?
Yeah, not Elko New Market. Way out.
Well, Well, it was interesting because you set up the realtor set up the search, one property,
Yeah.
and it's a rehabber at $250,
Right.
Right.
which is a
Original
little bit more than he
farmhouse,
wants.
She's a little dicey.
Right.
Might fall over.
Right. But you know,
Buying
it's
the
well,
land.
how much land would I get with that?
Yeah.
Like, none. You're gonna look right into your neighbor's bedroom. You know. But anyway, so we did the 1-0 buy down there, not for free, but we did a 1-0 buy down, and it started with a 575, and got his payment closer to where he wanted to be because he wasn't gonna go over that $1,500 mark. You know, it's just kind of funny what people's perceptions are.
What does that cost per thousand?
It costs 81. Costs about 80 basis points, 80
Okay.
bips. So it doesn't cost
Is
a
that like
lot.
a ruble then?
That's
a
like a
is that
ruble.
Like a ruble.
A ruble, yeah.
Ruble, yeah, 1 ruble.
1 ruble.
Everybody
So-
knows what 80 bips means. I
Yeah.
think.
80 basis points. So 0.8% of the loan amount. So
Do the
Just-
math, people.
just call
Yeah,
me,
really.
call James, and eventually you'll get some numbers. You know, so it's good stuff. So bonds are good, rates are fine. You know, rates are not affecting anything anymore.
I don't think so either.
And people have settled in. I think everybody,
the
everything I
payment is.
see,
The payment is.
payment is.
You know, they're looking at payment because when you consider your principal and interest, and then you layer on the taxes and you layer on the insurance, the taxes and insurance have gone up more than interest rates have.
Oh, for sure, right?
You know.
Yep. So it's a barrier right now on
Yeah.
the payment side. But I met with another couple earlier this week, so it's fun to be busy and it's fun to have those meetings, right? And you're just going through, and I love to do it in person. I love to
I do too.
go have a coffee with somebody, sit there with my computer, and we just talking. I have my yellow pad and my marker, and I'm just saying, okay, at this purchase price, and I just put down 3 numbers: purchase price, payment, cash to close. Because that's all people care about. And we can go, and then I go through one example. We'll go through all the numbers, but that's what people want to see. And what you start to notice is once you pick kind of a price range, like I want to be in a $300,000 home at 3.25, it doesn't move that much, and 275,000 doesn't move that much. So, you know, it's just fun to have the conversation. So, things going on in the market right now. Why don't you give us an update on how many homes are on the market? What are you seeing on the real estate side, real quick?
Well, what we're at 30,
About 5,200.
about
5,200 homes on the market. That's about on par with 2020.
Okay.
So just during the COVID or pre-COVID years when things really got wonky for a while, I like to use 2019 as kind of my base.
Okay.
Thing when we get that. That's a normal market. I think we're in just a straight normal, historically normal market.
Yep.
It's just great.
It feels normal.
It feels
right?
normal. It feels secure. It feels solid.
Mm-hmm.
The country seems to be optimistic.
Yep.
All the way around. Weather's great. What could be worse?
Mm-hmm.
What could be better?
So we're seeing. We talked about. I wrote down nice properties sell. Right.
Yeah.
That's a big deal
Yep.
right now. Staging. I'd love to hear your thoughts on staging. I have a realtor that has 2 homes. Ran out of staging material.
Mm-hmm.
Had the nice home didn't stage. The worst property staged. Guess which one sold?
The one that was staged.
Staged.
Yeah. Staging.
Doggone it.
Staging works.
Yep.
It absolutely works. That's why for 12 years I was selling new construction for 5-6 different builders.
Yep.
And when you have a spec home with no furniture in it, and you've got a model with furniture in it, same floor plan, same features and amenities, people would always want to buy the model. Can I buy the model? Well, we've got this home down here. It's the same house. They walk in that one. It's just,
I don't like that one.
it's just not the same. So yeah, you got to put some furniture in there. It's the spatial recognition part of it. People can't grasp sometimes how their furniture is going to fit into a space.
Right.
And so you need to put furniture in there. You don't need to stage the entire house. Mainly, it's the main level. So if you stage main level and master and owner suite,
Okay.
main level and owner suite,
That's a good enough.
that's enough.
Is that good?
Yeah,
Okay.
that's enough, because now the people who are writing the check every month, they see that their spaces where they're occupying,
Yep.
90% of the time, how it lays out.
Yeah, because you always wonder, like, how do I actually live in this house?
Yeah.
Because when I was looking for a home, it's like, okay, you and I are walking through. Okay, how do you live here?
Yeah.
Like, how do you live? You can't live here. Like I don't see like how I
can't
would
see it.
sit and how I would watch TV and how this would happen, and then you find a home like, oh, I can see how this one works.
It's convincing the seller of that many times, because staging is expensive.
Is it?
Yeah. It is. So if you're going to have a well-staged home, it's vacant, they've moved out, you're going to stage the house. I mean, it's $3,000-$4,000 to stage the house completely.
Okay.
If you're going to do a good job. I mean, if you're going to drag in some used furniture and stick it in there, that's you can get by cheap, just like you can get by cheap doing anything. But if you're going to do it right, it costs some money.
Okay.
And that's having someone who knows what they're doing with decent stuff that's matching, and and all of the accoutrements are there too.
Yep.
It isn't just a sofa sitting there. It's
Right.
all the stuff that goes around it, so you really feel the environment. It's not cheap.
Yeah. The other thing, so I was just curious on your thoughts on staging, because you're seeing that a lot more. We talked open houses, bond programs. Just want to remind people again that Minnesota Housing, a lot of the first-time homebuyer programs are out of money. So I was talking to one of our loan officers that's primarily what he does. He goes, MCC, that's out of money. This one's out of money. This one's out of money. This one's out of money. Minnesota Housing is back with money, which is good. But their limits used to be we'd get 18,000, now you get 14,000. Used to be you could make, let's say, 90, and now you can make 70, right? So, and that all we talked about last week, that all came about due to the fact that people are staying in their homes longer, so they're not being able to replenish those funds on the timetable.
On the payback.
On what they
Because
anticipated.
a lot of those programs have, it's like a silent second that needs to be paid back
Yep.
when you sell the property.
Yeah, and they figure people stay in their homes 4 to 6 years. Well, now it's 6 to 10 years, right? I mean, the average length of people staying in their homes is longer right now.
It is longer.
So it's interesting that you're seeing, some of that, and that people this is how they're reacting. They're giving a lower benefit out, which makes sense. And so I just want people to be aware of that when you hear all this money and we can stack it and all that. Some of that stuff is coming back a little bit, which is good. The other thing I just wanted to talk about real quick, I was asked to be on this podcast, on national podcast, and talking about homes under management. So when I say homes under management, what does that mean to you guys?
That means, to me, that means homes that are rented, that are being managed by a third party.
Okay. When you talk about homes under management, what does that mean to you?
Yeah, it sounds like rental property, either by a corporation that owns multiple properties that they're renting out, or an individual, one of the two.
Well, what this podcast is all about is how does the real estate community, the mortgage community, how do we take your clients that you have, Keith, and we say, okay, I want to help them manage that property, not just during the buying selling period, but in the life cycle of the home. See, I think what you do a lot with the lifestyle, the healthy homes, that's really a homes under management. Like how can we help you live healthy in your home? Well, that doesn't mean you're just helping people buy and sell. It means
No.
you're buy, sell, and then when they're living in the home, what are those
For
services?
that 10-year
How does
period,
that
yeah.
work,
Yeah.
right? And that's what this is about. And we're highlighting a Homekeeper, one of our vendors, in that. Like,
Okay.
what does that life cycle look like? How does Homekeeper come in, walk alongside the homeowner during that period of time with an annual concierge call, with an annual,
Did you replace your furnace filter?
Yep. Did you do that? Do you have any improvements you need? Do
Okay.
you have any landscaping that you need done? if
And
you
I did
do-
reach out to Homekeeper. We are going to get someone on the
Yep.
show coming up here, so we can have that
So,
conversation
be
more in
interesting.
detail. Yeah.
Yeah. So anyway, give me a call, 651-231-2500. Mortgage rates are good. If you want to get a refinance or get a pre-approved to purchase your new home, give me a call, 651-231-2500.
Calvin Kamick, ladies and gentlemen, as always, best segment of the show, of course. James
Of course
Stolson.
it is.
No
James, give
question.
us your contact information for
Absolutely.
Preserve Group Insurance.
The Preserve Group, 651-728-4334.
And we are the Hittner Group. This is Real Estate Chalk Talk, 612-627-8000. Give us a call. See you next week.